Happy Monday, everybody. I hope you had a great weekend. Last week pulled off another winning week, but as we know, the direction of this market is all to one side of the boat or all to the other side of the boat. So this week will be full of news that can send that horde on deck moving back and forth. Let's dig in. Let's see what happened last week and what we can expect from this week. Today is May 1st, May Day, also celebrated as International Workers' Day. As we know, it is not celebrated this time in the United States. Grover Cleveland chose to use the date in September as Labor Day. Regardless, this is your Monday market update. Last week ended as the Dow had its best month since January. What a headline, right? It is only the end of April. Sort of like the headline last week after about 80 earnings reports that things were looking in line with historical reports. Regardless, it was the best since January. Overall, not to start by turning the last page, not to the last page of the week, but after a pretty slow beginning, the markets did end strong for the week. The Nasdaq was the big winner, up about 1.3%. The Dow and S&P were up just under 1% again for the week. For the month, the Dow was up 2.5%, was up 2.5%, and the S&P was up 1.5%. Nasdaq was only slightly higher on the month. Let's do a quick day by day, and we'll come back to that. As a precursor to what we'd see a lot of, stocks opened unchanged last Monday without much weekend news to react to. The market did drift a bit higher early, then moved down as the Dallas Fed manufacturing survey missed by a mile, down more than double what was expected. Prices and wage readings stayed high, and thus stagflation fears returned. Market stabilized, and with little news, the markets closed pretty close to where they opened, pretty flat. Dow up just under 0.25%, S&P just up a hair, and the Nasdaq down about 0.25%. Tuesday brought a gap to the downside on the open. Monday, after the close, First Republic Bank was the first of the main non-money center banks to report, and the spotlight was back on the banks. News from FRC freaked people out again about the banking system. More on that in a few minutes. Add to that the comments by Yellen about the debt ceiling and the failure to raise it, resulting in economic and financial catastrophe, is what she said. Nothing like some fighting words to freak out the market. Hard landing thoughts resurfaced, and the sell algos went to work. It was once again one of those run to the other side of the boat days. The news that was similar to the news from the previous days that did little to move the markets or move them higher tripped the switch on the algos for selling on Tuesday. By the end of the day, the Dow was down about 1%, S&P down 1.5%, the Nasdaq was down almost 2%. Markets extended the selling on Wednesday as the market split the buyers and the sellers. The sellers stayed in the financials, and the buyers followed the Microsoft and Google news to the buy side. In case you are keeping score, yes, Microsoft is riding the AI train. In their earnings call alone, it was mentioned 50 times, and another dozen times or so in the Q&A. The main news from the tape, aside from the onslaught of earnings, was the government being a bit standoffish about getting involved with the First Republic, and that did the opposite of what happened when all the buzz was the government getting into SVB a few weeks ago. The other news was that McCarthy was going ahead with the debt ceiling bill that Biden has already said he was going to veto, and if you recall, he said, we will not negotiate. We're going to see how this plays out. Chances are it will not be good for anyone. Markets did stabilize when the oil markets rebounded on the back of news of more demand. Think global recovery. Oh, and as we spoke about some EV stats last week and the concern about those who think we'll be all in EVs soon, a new study was posted that there are only 3 public EV chargers for every 10,000 people at this time in the United States. You can bet they are not. Those EV chargers are not in any of the less affluent neighborhoods. So not sure how fast we're going to get to full adoption. By the end of the day, the Dow was down about 2/3%. S&P was down about 1/3%. The Nasdaq pulled off a positive return, about 0.5% higher. More solid tech earnings, sound familiar? On the back of this, markets gapped open higher on Thursday, and even though the eco data screamed stagflation, the markets were focused on other news. Meta was the heavy lifter, up big overnight and into the trading session. From the eco side, the GDP number was lower than expected, and jobless claims were moving back to multi-month lows. Recall that's a mixed bag as far as the Fed's concerned. Focused on the loudest bang, yes, the 3 billion users and the reaction of the markets to Meta. Dow was up about 1.5%, S&P up almost 2%, and the Nasdaq was up almost 2.5%. Friday brought the highly anticipated PCE, and it was in line, and thus no reason to believe that the Fed will not hike rates again at the meeting this week. As the market digested that, and we've already said this is already expected and built in. By the close of business on Friday, according to FactSet, 53% of the S&P 500 companies have reported. and nearly 80% of them beat the lowered estimates on earnings. At some point, if you lower the bar enough, you'll get the beats, and almost 3/4 of them beat on revenues. How low was the bar? For the quarter, estimates are that the earnings will be down nearly 4%, which is not so good, but better than the 6.7% that was projected as of March 31. For the day, all three indices finished at about 3/4% higher. I already gave you the weekly and monthly numbers, so let's jump into this coming week. It's going to be busy. Will the numbers show it? Jobs week, Fed meeting week, and more earnings. Quick quiz. With 4 months in the books, best and worst asset class returns to year to date, starting with the worst. Oil, yes, down over 7%. Best? Bitcoin, up 56%. Gold is next best, up almost 9%. And stocks, up about 7%. Before we jump into the preview of the week, that First Republic news from last week led to another fire sale, the third bank closing this year, and another bank purchased by JP Morgan at the fire sale price. Many think it's another great deal by Jamie Dimon. We'll see about that. Okay, let's talk about this week. Eco data will be fast and furious and mostly ignored except for the Fed meeting and the labor numbers, JOLTS, jobless claims, and Friday will be the non-farm payroll, the big one. As far as I know, that all eyes will be on it. Apple will also be releasing earnings, along with what seems like the other half of the S&P, though not quite. This will be a big week, and in case you go home Friday with a bit of angst, Warren Buffett's Berkshire Hathaway's annual meeting in Omaha will be going all weekend and televised all day on CNBC on Saturday. There'll be a lot of wisdom shared by Buffett and Munger, and although I do think that investing like billionaires is a bit different than what many of us do, there is a lot to gain from reading up on what they say. Let me wrap up by reminding you that this is the market update, and this is in the weeds information. You'll find more information on planning and all we do to help you stay focused on your goals in the Friday planning video. I also want to announce that we finally have our own website. You can find the videos and financial blog, as well as a lot of other great information. The address is www.randycohenihtwm.com. The emails you get that used to have the link to the video will now direct you to the website. Please visit often for new information. If you have suggestions, please let us know. Please keep in touch. Visit the website. Check back on Friday for the planning video. Have a great week.